Hello all. I am Meghana PS working as an assistant professor in commerce, Government First Aid College, Paramsagra. I am discussing about the subject financial markets and services under that module non-banking financial intermediaries. In this session, I am discussing about venture capital funds, its meaning and features. Objective of this session is to know about the venture capital. The outcome of this session is you are able to understand the concept of venture capital. Let's take a quick recap of previous session. In the previous session, I discussed about the meaning of housing finance. That is, the principal business of housing finance is to provide finance for construction and acquisition of home. And we saw various types of housing finance, namely house construction loan, house purchase loan, or bridge loans, balance transfer loans, home extension loans. Like that, we saw so many types of housing finances, and also we discussed about the merits and demerits of housing finance. Let's see the meaning of venture capital. Venture capital is known as risk capital. Venture is nothing but risk. So venture capital is also called as risk capital. Venture capital means long-term risk capital to finance high technology products which involves risk but at the same time has strong potential for growth. Venture capital means investing in a risky business, usually high technology products wherein it has a huge risk as well as at the same time which has a huge potential to grow. Venture capital company is the non-banking financial firm. It is also non-banking financial firm that specializes in building high-risk financial portfolios and provides equity capital or loan capital to promising new or innovative ventures. Venture capital firms, what they will do, they invest in high technology products which are new and innovative in nature, which are risky in nature also. They provide investment in the form of equity or in the form of loan like debentures or debts. So they also have a huge potential to grow further. So in that type of businesses, the venture capitalist going to invest their funds. Let's see the definitions of venture capital. So according to International Finance Corporation, venture capital means an equity or equity featured capital seeking investment in new companies, new products, new processes or new services that offer the potential of high return on investment. So here they're providing equity or equity featured investment to the new businesses. Either they may produce new kind of products or they involve in new processes or they provide new services which has a potential for higher return for their investment. In that kind of business, the venture capitalist is going to fund their amount. Next, according to William Davis, finance for young developing firm in areas of high technology. Usually, venture capitalists fund their amount for high technology products where they are young or new in nature. They are developing in nature. The basic idea is very simple. That is, find a promising small firm. Means they find out the firms which are small in nature but they are promising, which means in future they may provide potential growth or return for their investment, and providing financial backing. So identifying those kind of firms and they provide financial help for those firms. Either it may be equity or loan and share in its success. So after providing the finance, when the company grows, they are going to get success. Along with that, they can share the success with the venture capitalist. So this is the whole concept of venture capital. Let's see the features of venture capital. First one is financing of new companies. So the first thing is venture capitalists provide the finance facility for the new companies only. They are not going to provide the finance for the existing companies. Next, equity based or loan based or convertible debentures. They may provide equity, means they may invest in the share capital of the business, or they may provide a loan or in convertible debentures. So when they provide loan on convertible debentures, they invest in convertible debentures, they can convert their debentures into shares in next future date. Next, aim at capital gain. The major aim is not on the profit of the company, but capital gain or capital appreciation of their investment. So when they are investing in the small firms, the value of the shares are very less. But when the company grows, the value of the shares, market value of the shares will be higher than the purchase price. So that capital gain is the main aim of an venture capitalist. Next, it is a long-term investment. So it is not a short-term or medium-term investment. It is a long-term investment, which means they invest the money at the very early stage of the firm, but they will take back the amount after they get the success in that firm. So it is a long-term investment. Next, continuous involvement in the business. So the venture capitalists just not provide the finance, but they continually involved in the business where they invested their funds. Contains risk. As they invest in very early stage of an firms, they cannot predict the success or failure of the business. So the investment is at very risk. Joins the entrepreneur as a co-promoter. Most of the venture capitalists join the promoter who generated the idea of a business. So join the promoter or an entrepreneur as a co-promoter as by investing the huge amount in their shares. Mainly small and medium sized firms. They invest mainly in small and medium sized firms because they can get a huge returns when they these small or medium sized firms are turns as a successful firms. Some of the top venture capital firms in India are Sequoia Capital India, Hellene Venture Partners, Axel Partners, Nexus Venture Partners, Intel Capital India. These are some of the top venture capital firms in India. Summary of this session is venture capital means financing new projects which involves greater risk, in turn which has a higher potential of growth. The major main objective of the venture capital is capital appreciation, not for profits. It provides long-term finance to small and medium-scale industries by purchasing equity or convertible debentures or by providing a direct loan. These are the references for your further readings. I hope you understood the concept of venture capital and its features. Thank you all.